Hello and welcome. This is Q2 with BQ Prime. I am Agam Vakil, and we are taking you through a conversation regarding and around Samadhan Motherson International. Its earnings are out, and it's looking like a steady quarter. We are looking at a year-on-year growth in terms of their revenues to the tune of nearly 28% on a consolidated basis. We've also seen, in fact, a little bit of an improvement in its margins and reported profits up around 2.1%. But of course, this takes into account certain restructuring costs as well. To take us through this quarter gone by, as well as what we can expect going forward, I'm joined by the management. We have Pankaj Mital, he is the COO, and Kunal Malani, he is the CFO of the company. Gentlemen, both of you, thank you so much for joining in. Pankaj, I start with you. My first question is to do with the base effect. Now, I know that the last quarter, that is about a year ago, the entire sector was riddled with challenges such as chip shortages, fluctuations in vehicle production, inflation in freight and energy costs. Uh, we are looking at a 28% growth in revenues. This is very strong. But to what extent is this performance on account of low base, and how much would you attribute it to a general growth that you see as far as the business goes?
Thank you very much for having us. And first of all, wish you a happy Dhanteras and a very happy Diwali. We see that overall there has been a growth in the overall numbers. The markets have been strong if we compare year on year. Of course, this quarter is usually having the summer holidays in Europe, so there has been an impact of that. Also, you would have seen that we have acquired many assets and they have been merged into the company. They will be fueling the growth even further. We have seen very strong growth in the emerging markets, and that's where we continue to invest. And we are very strong in these geographies. So we are able to now bring in more and more know-how and technologies with these acquired entities to provide those solutions also, say in India, where we are growing at a very fast pace and now investing in building up new and new facilities for supporting our customers' growth.
Right. But Pankaj, have these challenges abated substantially? Are they gone completely? For example, chip shortages, or are these challenges still there to a certain extent, and that they are expected to ebb away over the next couple of quarters? And by that, I mean not just chip shortages, but also fluctuation in vehicle production. Considering there is still, the economy in Europe is still under a little bit of duress, and also inflation and freight and energy costs.
Yes, some of these challenges have got at a new level. So some of them have got resolved. As you would see, that still the wage inflation continues to be there. There have been some of the commodities which have become more stable. The shipping has become more stable. Yet the energy costs have become stable, but yet it is at a new high. It's at a new level, not at the pre-COVID levels. So those challenges are there. Chip shortages have resolved to a great extent. Still, there can be, depending on what kind of product you're using, what kind of things are there. There can be still some supply chain challenges in the last year or in this quarter. We did see some challenges still due to some of the natural disasters like floods and other things. And then we did see some instances in US due to some other reasons. So there will always be challenges. But then as a company, we are 3CX10, so we are in different geographies, different products, and that has been the de-risking measures which the company has taken. And for its own future growth, apart from the acquisitions, we have also diversified into new verticals like aerospace, health vertical, where the acquisitions have also happened, which are transformative in nature for these new divisions to grow and grow them globally.
Right. I do want to talk about your new acquisitions and the new vertical as well. But before that, Kunal, I come to you. We've seen one-time provisions, and these one-time provisions have hit the bottom line at the moment. And according to the notes that we have, this is phased operational restructuring of certain units in France, Germany, etc. My question is, could you elaborate as to what restructuring is taking place? What sort of an impact it can have on business? Will it have an immediate impact when it comes to your profitability? And also, if whether or not we could expect more expenses of such going forward in the next few quarters?
Look, I think we've announced 15 acquisitions. Among the ones we have closed, we've added 22 new facilities in these regions, added 7,000 odd associates in these regions. And as as anyone who would be looking at this from synergizing perspective, from looking at how the production centers are changing across the globe, we are also doing a rationalization in some way of the facilities that we have, making them adapt to how the market changes are, having added so many new facilities and associates in there. So it's part of the process of assimilating the newly acquired assets, synergizing with our existing ones, and finding the opportunities, to make the aggregate business a lot more stronger. This has been done along with the customer. So in effect, there is no lost sales that is going to happen because of any of these phased, approaches. The amount will be spent over, let's say, 2 odd years, and the benefits will accrue from there on. Altogether, look, I think when you've added all of these facilities, you've tried to see where best you can produce the requirement from the customers, work with the customers to then figure out what's your best production plan, and that's what's there in execution. Will take a bit of time to execute, but we took all the cost upfront, so everyone is aware about it, and that's why it's a one-time aspect. It's not a regular feature that you will be seeing.
Okay, fair enough. Pankaj, then why don't we just take up the point of your new vertical, which is added? I'm sure investors will be very excited about learning about integrated assemblies. Can you give us an idea about how the acquisitions that you have made, including SAS, which is one of them, SAS, which is one of them, can provide value and, of course, add to your performance going forward? If you could also give us some sort of a color as to what sort of impact it can have on revenues, perhaps a year down the line or 2 years down the line, if at all.
See, as we had mentioned that with the acquisitions which we have already closed, the combined pro forma revenue would be about $1.6 billion net and $5.4 billion gross. And then the acquisitions which we have announced, which are not yet closed, they will add about $1 billion further to it. The SaaS, as you mentioned, is a great company because what it does is it provides the ultimate assembled product to the customer, very close to the customer, supplying like just in time, 10 minutes, 15 minutes away from the customer or inside the customer premises. So it brings us even closer, what we call as like a 0.25 supplier to the customer, where we assemble like cockpits or many other different kinds of parts. And it gels very well with our module and polymer division also. So it brings in a great know-how, great working together of the assembly operations and bringing in more and more products into the assembled products which we bring to the customer. Apart from that, the new divisions which we're talking about, as we've been growing in the aerospace sphere, with the support of the customers, because we started working with them, we could acquire Sama and also AD Industries, which is into the aerospace side. And on the health and medical vertical side, we have Verillic, which is coming in. So these are also transformative in the sense that from a non-automotive business growth, they will fuel their growth, and they help us to bring solutions to the customers in these new areas where they wanted us to grow with them. And it's bringing in more and more different kinds of opportunities with either the tier one to the aerospace or the aerospace airplane makers directly in that industry.
Right. Kunal, of course, we see an increase in debt as compared to where we were in March, but I reckon to a certain extent, this will also be on account of the acquisitions that you guys had planned. That said, in terms of your net debt to equity, if I'm not mistaken, it currently, pardon me, your net debt to EBITDA ratio stands at around 1.9%, and you guys say that your policy is 2.5%. Given the kind of conditions, the interest rates that we have, that's well, where do you see your finance costs moving? That's one part of the question. Secondly, through the course of the second half of this financial year, what sort of do you guys have any plans to unwind some of this debt, perhaps, even as you start realizing cash flows? What are your plans here?
So look, right now the fact is we are inundated with opportunities. So in this volatile market, I think people are finding a player which can house things better, and we are seeing more and more of these opportunities play out. That's how the 15 acquisitions have been done. That's how 3,800 crores was paid for the 4 that we closed this time. That's how you're seeing we have expanded our capex guidance from 3,000 to 4,500 crores in order to capture both the organic and inorganic potential opportunities that are going to come our way. So in all, I think we are in a strong growth path where our business model is getting comforted by the customer's trust, and that's what showcases the strength of the capability that we have built into this organization. From a leverage perspective, this is by design. It was known to be a debt financed acquisition at 1.9 times. I think we're very comfortable with where we are. If you're looking at our interest cost, it has gone up as our debt has gone up by, needless to say, it would go up. As the base rates have gone up, our debt cost has also gone up. So that's also played into how the debt has, how the interest cost has expanded. But it's not a worrisome fact because we are seeing a lot of traction in our business. We are seeing next few quarters to be better. That's how traditionally it has played out. We expect the same to play out in the next few quarters as well. The customer's trust is giving us the comfort that even if there are pieces of volatility that were to come in or some variables were to go against us, we will work with them to try and find more amicable solutions as well as what we have done in the past. So all in all, it's a good procure. We've helped the customers through many of these acquisitions, and so have they by giving us more and more opportunities. So I think we're on in a fairly strong wicket, and not really worried about where the debt is right now. And it's more about saying how many more opportunities can we really build in rather than worry about that right now. But whatever we do, look, we'll always be within our financial policy of 2.5 times net debt to EBITDA.
And a quick final question, Kunal. How are you reading inflationary pressures? I'm sure they have abated as compared to last year. But what's your reading here? Any potential problems that you foresee in the balance of this financial year?
No, I think inflationary pressure has been going on for some time. It's across the world. So the reality is there's nowhere to hide from it. And in turn, I think it's become an opportunity for the emerging markets. I think that is where the relative inflationary pressure is less. That is where production costs are still a lot more reasonable than it is in many other parts. And that's how you're seeing our organic part of the capex is flowing into the emerging markets. And that is exactly to cater to demand that we're already seeing because we set up capacities only once we have the orders. But that's how directionally you're seeing new order books getting created in emerging markets. So that's how you manage the inflationary pressures. The rest, I think, it's a conversation with the customers to find good solutions to pass, do value engineering to improve your own cost structure. The rationalization that we were just speaking about earlier, the 250 odd crores that we have booked upfront is part of that process because there will be some parts which the customers will also feel unviable in the current environment of inflationary pressures that are there. And that's where we are working with the customers to again find solutions of making those parts at better locations. So we work continuously to keep generating opportunities at times which are volatile.
Right. Well, fair enough. Thank you both, gentlemen. Thank you for joining us and taking us through the quarter's earnings as well as what we can expect. And also wishing you a happy Diwali and a prosperous New Year. Thank you so much.
Thank you. Thank you.
Wishing all the viewers of BQ Prime a very happy Diwali and a wonderful festive season. Have a great year. Thank you.